All right, Evan, welcome back for another episode of This Week in Charts via Carnivore Trades in Wall Street for Main Street. Starting off with the S&P 500, what a week we had here. Uh, Major downside selling action coming on into the market here. Uh, Really feels like yesterday we had this light volume rally where we were kind of complaining about the volume here, and now we have some volatility and some high volume back in the market. Let's take a look at the VIX here first. So I talked about this last week. I said 29.30. That's going to be the handle that's going to cause problems in the VIX. You get through this trend line, and that's going to cause problems in the market. And we saw the VIX get up to a almost a year-to-date high. Got close to the January highs there. Did tag that 35 handle. So the VIX causing some problems here. And Friday we saw some selling here in the S&P. And a lot of that I think is to investors getting skittish about holding into the weekend. There's lots of news. Negative news regarding the new variants and so on and so forth. So you're seeing a little bit of skittishness. And then really intraday here, saw a little bit of short covering, some profit taking going on here. By the way, we did close out some of our short positions here with Carnivore Trades in the Patreon. We had the QID, which is 2 times short the NASDAQ. We also had AMD short, which we took profits on today as well. But getting over here on the NASDAQ, I've really been hammering this trend line here on the MACD and the weekly specifically. So this bearish divergence here, I've been saying like the Nasdaq is probably topped out for the year. We got up to this trend line and it coincided with the divergence on the MACD. Now we can see the blue line is crossing over, so that is a negative for tech. Doesn't mean we can't have a little bit of a bounce here next week. I think markets are a little oversold right now, but I think into the end of the year we probably get down to that 370 handle here on the triple Q. So I've been harping on this trend line for a few weeks, and I said this is, the Q's getting up here is a risk zone for the triple Q and for the market as a whole. But yeah, tech coming in pretty nicely here. Did close just back above the previous all-time high there, so that support did hold. You did bounce off the 50 MA as well. Spiders, on the other hand here, the SPY did close slightly below that previous all-time high, so a little bit weaker. We're seeing a little bit more weakness in the S&P as opposed to the NASDAQ. Russell 2000 absolutely getting smoked here. Let's take a look on the weekly. This is an ugly chart here. So you have this attempted breakout and then 4 weeks just straight down. Dow also has been weak for several weeks now. And the diamond here is getting a bounce here at the 50 weekly MA. You have some nice little support in this area. So again, I do think that we probably get a little bit of a counter trend bounce probably next week. I don't think this market's going to go straight down, but I still think there's a lot of risk in the market right now. Some stocks that got beaten down today. Let's talk about DocuSign, down 42% here. Look at how it just completely disregarded all of this chop here. And I mean, this is where I would touch DocuSign. It's about $60. I mean, this is a beat down here. This is an exodus. There's lots of stocks that are just like this. Over the last couple of weeks that have just seen a mass exodus. Peloton, Zoom, Roku. We're just seeing beatdowns everywhere here. Look at DraftKings, Penn. I mean, these things are just getting smoked. There's really an exodus. And I said last week, they were using Apple to kind of prop up the market while they sold everything else. And that worked. And, it looks like they finished selling a lot of other things. And now they're starting to sell FAANG as well. Microsoft coming in. Finally, Google as well. We talked about AMD, NVIDIA. So the semiconductors now losing this 20 moving average here. They just closed above this little trend line here at the end of the day, but did close below its 20 moving average here. So possibly some more downside. And I talked about this over the last week. The difference between the selling in, say, the NASDAQ and the broad markets here, but back in March, and really in September, is you had, there were sectors that were bidding. Look at what the XLE was doing in March and September. It was holding up reasonably well in September. It was actually bidding in March. Same thing with Dow Transports. The Dow Transports were bidding in March, and they were holding up in September. Small caps were making new all-time highs in March, and in September they were holding up. The XLF, again, this was bidding in March, and in September it was holding up. Now we're seeing broad-based selling. It's everywhere. XLF selling off, Dow Transports selling off, small caps selling off. It's a broad-based decline, and it's no sector is really safe right now. See this Russell there, triple Qs obviously coming back in. So we're seeing broad-based selling. Also, Chinese stocks getting hit pretty hard. This was on news that I believe DD was going to be delisted. So Alibaba, Baidu, all getting hit in sympathy of that. So more negative news out of China coming out here, hitting some more sectors. Let's talk about bond market volatility. So bond market volatility is never a good thing for equities. And we had just a week and a half ago, really November 24th, we are at 1.7 on the 10-year yield. We are at 1.4, or excuse me, 1.34 today at the close. The 30-year was at, let's see, yeah, just over 2% here and closing at 1.67. So that is major volatility. If you guys don't follow the bond market very closely, this is major movements and in a very short period of time. So we're seeing major bond volatility here. That is never a good thing. Now, 10-year is into a little bit of support here. I also think that the 30-year is into a really good support level right now as well. So we'll continue to monitor that. But the bond market volatility is never a good thing moving forward. Let's take a look here at gold. So it did lose this trend line yesterday, but on a weekly time frame, by the close, they did, bid it back up. So gold did hang on to this little trend line here that we've been following for a couple of weeks. And again, I get a lot of questions about gold. Where is it going? When's it going to break out? When's it going to do this? It's, really what's going on with gold right now, like they've faked us out twice here. They've gotten it up here and it's rolled over. They got it up here, it rolled over again. Really, gold's kind of in a prove it mode right now. To me, we've been range bound since March. We got up to, 1900, just over 1900 in the beginning of June. And we had this low down here in the 1675 area in March. And we just been range bound, but we are consolidating. Notice how you have higher lows and lower highs. So it's, eventually this is going to spring one way or the other. But until it does, crack one way or the other between these trend lines here, it's really just hard. It's really hard to call it. It could break out. And then if it gets back above 1880, it probably, it's probably breaking out. But, in the near term, it's really hard to paint a picture here. It's a lot of chop and a lot of, kind of backing and filling going on in the gold market. Same thing with silver. Silver was pretty weak over the last couple of weeks. It did catch a nice bid here. This is a pretty bullish candle here. So, they did defend this support area. This is where you broke out of previously. So maybe silver gets a bid. But again, we've been very range bound. I mean, let's pull the chart back here. Look at how long we've been in this range on silver. And it's just, it needs to do a little bit of work to prove itself to me before I get interested on a sort of near-term basis. So let's take a look here at the dollar index also. So dollar ultimately kind of in like a backing and filling mode. I still think it can get up as high as maybe 98.50, 99, but it did get very overbought in a very short period of time. So I do think it needs to consolidate a little bit and, kind of consolidate these gains here before it can advance to new highs. Maybe it consolidates even into the end of the year. That could be a thing before it takes off, possibly early next year. So we talked about that. Let's talk about uranium really quickly. So a lot of questions about uranium as well. So I'm looking at the URNM here. You want to see it kind of hold this 75 handle. This is where you started to put in this bearish pattern. You broke out of that, and now you're back testing it. You also have that 100 MA there. So you want to see that area hold on URNM in the near term. Otherwise, it's probably going to head down to that 60 handle. And that's just a near term, level. You also have the 20-week moving average there as well that you did tag today. So it probably gets a nice bounce next week, but if it can't hold this area, it probably wants to go down and check that 60 area. So if you're looking for a long-term buying opportunity, that would be your area, $60 on the URNM. That would coincide with, probably about 20-50 on the URA. Cameco, you'd be looking, in the $18-19 range. And Denison, probably, so we'll call it $1.20 area. But anyways, guys, going to wrap it up here. Again, we'll continue to watch next week. I think we get a bit of a bounce here in the markets. We did get really oversold really quickly. So it wouldn't surprise me if we get a little bit of a bounce, but I am expecting more downside in the next couple of weeks and months. Anyways, guys, take care. Thanks for watching, and I will talk to you all next week.